Okay, the question for our next panel is are banks becoming tech companies or are tech companies becoming banks? This panel is going to be led by my new friend Pierre Wolf, who's the managing director of Exec Connect. Without further ado, I hand it over to Pierre.
Thank you very much. All right. Oh, thank you. Thank you.
For the heck of it, let's stand up. Let's do a standing ovation. Yeah, come on, no.
You're eating into our time. You're eating into our time.
We're so late in this conference. We're going to finish strong. Is anybody with me? Oh, come on. Those of you sitting, come on. You can do it. Oh, sad. Some of you, great. Some of you, I'm going to talk to you after this conference.
All right. So everybody, thank you so much for being here. This is going to be great. It's a really interesting topic and a lot of questions around it. So I'm kind of going to open it. First of all, our panelists here, as I think I mentioned, and I was moderating a panel yesterday, their backgrounds and profiles are in your programs or on the site. I recommend you look there so we don't spend too much time on backgrounds of what they do. But I will let them each go through and give us their name and company they work with, and then we'll go from there and start some questions. Mike.
So I'll talk into my mic. I'm Christina Kramlich, and I work for SoFi. And you've probably heard of SoFi, but we've grown significantly over the last 5.5 years or so, 6 years that we've been around, starting in the student loan space. Now we're one of the largest unsecured lenders in the United States.
Hi, I'm Mike Gardner. I run the BNY Mellon Silicon Valley Innovation Center in Palo Alto, which is a strategic delivery center, an R&D center, and a research center. BNY Mellon, if you don't know it, is a very large B2B bank. You may not be familiar with it because we're behind the scenes to a lot of other financial institutions, but we are, there's a lot of different things we do to help run the global economy.
And my name is Anatolia Ubalde. I'm the CEO and founder of SizeUp. And SizeUp is big data for small business banking. We try and bring the type of market research and business intelligence that typically only huge corporations have access to and put it in the hands of small businesses so they can make smarter decisions through data.
Which is great to have these three because we're really going to get three perspectives from all of the sides of the question we're going to address today. And so dealing with this notion of are banks becoming tech companies or are tech companies becoming banks, I think we have a good panel to have that conversation with. So Christine, I'm going to start with you. You're on the tech company, the fintech company side. And recently did something, but before we get to that, let's generally talk about that question.
The title of the panel. That would be. So when we first started, I would say that we were trying to solve the student loan debt problem. And so I think we were really a finance company rather than a bank. So it was neither. But we created the technology so that we would be able to serve the customers and then have transparency around what we were doing. And we didn't have the burden of legacy systems. So that was actually a great opportunity for us. So, not that everything was perfect, but we started as, I would say we were fin first and then we were tech.
Tech companies are definitely becoming banks. There's companies that have actually gone out and bought banks so that they can bought branch offices so they get a chance to get a bank charter from the federal government, which is part of what it takes to be a bank, by the way. But what I want to really look at more is are banks becoming tech companies? And I think by many, many, many measures, absolutely they are. All banks are trying to move faster. All banks realize, some started jumping on this earlier rather than others, but I think almost all banks realize now that you have to be a software company if you're going to exist in the 21st century and you're going to thrive and prosper and so forth. Banks are adopting agile methodologies, design thinking. Now, it's easy to say that. It's hard to do it. So these changes aren't necessarily visible right now, but there's no doubt that financial institutions are trying to learn from the Silicon Valley way and trying to emulate that, clearly.
Let me challenge it a little bit in the sense that, I grew up in New York, and banks were the biggest hirers of tech employees on the East Coast. And so when I think of this question, I'm always like, well, when were banks not tech?
Well, tech changes, right? And so tech today is not the same as it was. Tech today is, you want to roll a feature out in a week or a month or something like that, right? I would say you're not a tech company if you're a bank and it takes you a year to add a feature to your software, was one critical measure of that, as an example. So yes, Wall Street adopted computing maybe as early as any other industry, going back even to the 50s. And so, yeah, that's definitely true. And Wall Street's had technology. That's definitely true. But that doesn't mean that they were a technology company or operating like a technology company. That means that they were employing technology within a bank. And I think what we're seeing now is that they're still banks. They still have bank charters. They still provide services like that. But all the institutions are trying really hard to become a tech company in terms of their capabilities, how they operate, what they can do to digitally integrate and to be digital enterprises.
And then I think you have to be able to build teams and have flexibility within teams so that operationally you can deal with all the requirements that it takes to create financial products, manage financial products, keep customers happy, deal with regulation. We're in a highly regulated environment. So your workers have to be able to work within those boxes, but hopefully they're not too prescribed by the boxes.
Right.
So it's a delicate balance.
Totally on the general question.
Sure. Tech becoming banks or banks becoming tech, the answer is yes. Both. But it's not special to us. I mean, I know we're all here because we're all in finance, but every business is dealing with this, whether you're small, medium, or large. It's hard to be a successful business if tech isn't part of your DNA. If you're going to, I recognize there are boutique businesses or artisanal ones, but if you're going to grow and be successful, you have to be a bit of a tech company. And I think this happens for all industries. So for example, is Tesla tech or is it manufacturing? Is Amazon tech or is it retail? I think the main point is there's a lot of disruption. There's a lot of innovation. The banks certainly have some incumbent advantages. And it's pretty clear also that the status quo will get you killed. So I think there's a lot of people chipping into those spaces, whether it be the small fintechs or the established ones, or certainly the larger ones. Anytime you say Apple or Google, I mean, they have a lot of reach. But the one that's really kind of interesting to me is I was in Milan at a fintech conference, and someone from Alibaba was talking about their plan. And I was just like, oh, they are trying to be everything. They're going to be your market. They're going to be your store. They're going to be your marketing and find your customers. They're going to find your suppliers. They're going to understand all the flows of the money, and they're going to control the POS. And then they're going to give you finance based on how you're performing. Like, it's the entire loop that they've got there. So I think that's the side which is new and super disruptive, and then how many people can play in that space?
That's a really good one, and you're right. I mean, at these behemoths, in that sense, they're challenging so many industries at once when they go down that path. Hey, Michael, so as BNY, would you call them a tech company? Are you guys, as a bank, are you moving as becoming one of those?
We're have been trying for a few years now really hard. I mean, I think the reason that we opened the Silicon Valley Innovation Center is the company wanted access to Silicon Valley engineering talent to be able to deliver the system software that the company needed for the new platform that it's been building. So we now have a platform, BNY Mellon Nexen, N-E-X-E-N. That platform is a platform in every way that you would think about platforms as you know and love them, coming from Silicon Valley, ecosystems and third parties and so forth, APIs, to be able to get at data and to digitally integrate and things like that. So yeah, we have a platform now, and we're building a platform business on top of it. Now, it's early days in that, but we're well underway with that. So absolutely. Now, the interesting thing that Anatolia brought up was this, the snarfing the entire value chain and so forth. And we're not necessarily trying to do that, even though we are big, and there are many parts of the current value chain that we already participate in and have significant positions in and so forth. But we're trying to partner. And I think that, since banks are becoming tech companies sort of, and tech companies are becoming banks. What's very interesting is looking at the nexus of that and looking at how they're collaborating together to do digital integration and to partner and things like that. It's a really interesting phenomenon that's happening right now, basically, and we're definitely in the thick of that. So we're looking to partner for parts of the whole, the whole value chain.
Cool. So Christina, SoFi, you guys went after a unique market sector. Not many people had seen it as an opportunity. 6 years later, wow. And you guys recently purchased a bank.
Zen Banks, right.
Yeah. So,
earlier this year.
this is the other side of the story.
Well, it's going to give us the ability to offer deposit products and checking, cardable, so that we can really have that customer relationship and not only refinance their student loans and give them a personal loan and a mortgage and manage their wealth, but also allow them to transact on a daily basis. So it's really about meeting the customer, where they want to be. So giving them flexibility and then, having hopefully the technology to enable all of that. So Zen Banks was pretty far along in that, and generally we build everything in-house. Sometimes that means we, take longer than we would like, but it enables us to really go through the chain of, what's important and try to figure out, if there's any inefficiency that we can live without. That'll make the process, smoother for our customers. So that's what that was all about. And so
That's funny to me in the sense that, the notion of, wow, I've always thought of banks as the big players. And the notion that you guys bought a bank really is...
Yeah, but they're an internet bank. And so they were very aligned with us. They also have customer service centers all over the United States, particularly on the East Coast. And given that our customer base is all over the United States, it enabled us to, have longer hours for people that were, East Coast based. So they could call up and figure out what was going on with their student loan or their personal loan or wealth management or mortgage, and interact with a human. Because that's the other thing that we found is that a lot of people want to transact online, they want to pay their bills online, but when they really have a customer service issue, they need to talk to a human. So there's a lot to be said for the old-fashioned relationship side as well. And I think, the challenge is going to be finding service models that fit in the middle there.
Right.
You just made a really interesting point, I think, which is if you think about the history of banking, it's really been all about relationships. I mean, in the old days in the United States, in some town in the Midwest, the bank would know, your father, your mother, they would know your grandfather on both sides, your grandmother on both sides. They would know you, really well. They would know, you got married a couple years ago, now it's time to talk about financing your house. And, that trust relationship is an integral part of banking, and looking at how that's starting to, adapt and change in the course of these technology changes is a really interesting phenomenon.
Yeah, I agree totally. So Anatolia, I mean, in the case of SizeUp, you guys are, a fintech company, and you're helping banks better serve their customers, right? So what do you see in terms of how banks and technology are collaborating or competing?
So I think the main narrative that came out as a lot of fintechs emerged was that the fintechs are there, they're there to destroy the banks. I don't know, the new season of Game of Thrones just started. I guess the fintech equivalent would be all banks must die. And that's attention grabbing, and that's what, is going to get a lot of eyeballs to pieces in fintech. But the reality is that many fintechs also see banks as partners. And maybe it's the old version is that the fintechs are going to eat the lunch of banks, but now it seems like fintechs are having lunch with banks. So just as an example, so SizeUp, we were selected by Swift as one of 12 what they see as really hot fintechs globally. We went to present the 12 of us. Out of the 12, 11 were focused on doing partnerships with banks. But there was the one that was just out there saying, banks are horrible. It's all about the margins. They're screwing you. Come with us, and we won't do that to you. And the whole audience was all bankers. What was quite interesting to me is how many of them knew that this company was all about disrupting them, and all of them said, that's a great idea, I got to download their app and use it. So I mean, all of these things are really happening. The other issue is the issue of the expansion of what financial services is. Some of these things are totally new or rips on what was old. So before, if I need my credit score, I need it for what? Maybe to buy a car or for a mortgage for the home. And now it's credit score every day and you can track everything. Or the idea of ATM. I don't know if you guys have seen Idea Bank. Now they have an ATM that will drive to you. Right, so it's something pretty new. Or what we're doing with Size Up, like this whole idea of can we help small businesses be smarter at scale through data? And we don't look like traditional financial services, but we are part of this new ecosystem. So I think that there's the old or traditional, the banks, there's the fintechs, there's now the tech companies, the big name, big brand tech companies. I see, and I think I agree with you, the future is hybridity and partnerships. We all have many things we can do, but there's certain things that every company is really great at, and that's where I think they need to focus.
Awesome. So, with that, I think one of the things we're seeing is a lot of innovative startups, at least so in the insurance industry. It's a very capital-intensive business to get into. And the InsurTech model has been very innovative UX, user experiences, customer acquisition models, but they're having to partner with large insurers in order to support the back end and the capital requirements of that industry. Do you suspect that that's kind of what's starting to happen in banking too? So, we mentioned the charter issue, and bank as a service is becoming a big deal. Is this kind of the same dynamic happening in banking?
I think it's the same dynamic. I think the driving factors are a little different. So it may be a little less the capital requirements, even though there definitely are parts of that. I mean, I think, so capital's part of it, but not only charters, but also knowledge of regulations. I mean, the US regulatory regime, the EU regulatory regime, and in significant Asian countries, the regulatory regimes, they're complex, and you really have to know what can I do to maneuver and what can't I do, and you can really get yourself into trouble quickly if you aren't aware of that. So knowledge of the regulatory regimes is a key dimension of it as well. Also, access to data. I mean, modern technology requires lots of data. There's small data technologies that can add value, but a lot of it is really based upon massive amounts of data. And the startups don't necessarily have that data. So they may have a model that they think is going to yield a lot of value in being able to predict behavior of a particular demographic or predict, all kinds of different things. But at the end of the day, they have to have that data to be able to make the model go. They may have developed it and back-trained it on a select set of data, but they don't necessarily have the production data and the historical data that is going to allow them to really get the value. So I completely agree that the marriage is happening because both sides have needs, and banks bring things to the table, and fintechs bring things to the table. But the fintechs have needs as well, and the banks have strengths that can complement that. So we're definitely seeing that.
Christina, are you seeing similar things?
Absolutely.
Yeah.
We have a partnership with Protective, so in the insurance space.
Okay.
And it's kind of a pilot, but we're finding some of our customers are interested in it. But like you said, I think it's going to be a long-term thing, and you can't just go out with sort of one try. This is going to be a multi-iterative process to get it right and to collect the right data set, so then you can match up with match the technology capability with the data sets, and then you can actually find customers and meet their needs and be able to use the kind of predictive power that you need to really make a difference in that. But and there are a lot of people trying, so I'm sure it's going to become extremely interesting.
Yeah, for sure. I mean,
Very soon.
look, I think I'll hit a couple of other things on that front, but yeah, look, PSD2. Banks are being forced to open up. This is a European standard, a EU standard that's emerging, that's forcing banks to open their APIs up and allow innovative startups to begin to have access to this stuff.
But to the point Anatolia made, it's not just going to be innovative startups. I mean, I kind of imagine that Amazon is there lurking and Google's there lurking and Alibaba's lurking there to kind of go, look, this is going to allow us to go essentially take customers from existing banks, basically, and so, yeah.
I'll go further. So I was talking to a large Dutch bank, and when they explained this PSD2 and the opportunity, they described it very differently. They said, hey, this gives us a chance to go after our competitors. And I provide the platform that users can use to tap into the competitive banks.
It's a very interesting initiative because it's really going to shake things up in a lot of ways. And the nimble companies can all, no matter what type they are, they're looking to try to benefit from it.
And Anatolia, are you seeing some of the effects of this as well?
Well, one of the other things I see is that a lot of the startups, the fintechs, are also thinking globally very quickly. Like, it's not quite as local as some of the footprints of banks. I mean, we're relatively new, and we just opened up an office in London so that we can reach European markets. And I think that's just because a lot of the companies that are growing and the startups, they start from thinking global. So I also think that, though, there are some scary elements for banks with these new entrants. I guess you really talked about that. I'm not going to go too much further with that.
Well, but they have to think about who they're hiring, and they have to have the expertise on board in order to build the right engines to be able to grow something to scale that's going to meet needs across markets.
Well, a large asset management firm that I worked with was talking about the concerns around wealth management platforms. And they weren't that worried about it. Their view of it is, we are just going to invest in one of these participants, bring it, and we have the distribution and access that a startup may not have. And that's costing customer acquisition costs that are through the roof for the startup, but are not through the roof through this distribution channel. So I think it's interesting how they're all maneuvering that. So we have about 4 or 5 minutes left. It'd be great if anybody has questions, just throw your hands up. Otherwise, we'll just keep talking.
So, on the digital bank as such, are there different legal aspects that coming along to take care of these kind of innovative companies taking?
Well, there probably will be, like, for example, if you look at blockchain and Bitcoin and initial coin offerings and things like that, all the regulatory authorities around the world are scratching their heads going, well, because they all control initial public offerings of stock, and so forth. And so they're trying, and ICOs are both kind of stock and kind of currency as well. So they kind of cross the line basically and so forth, depending on what the token is representing and so forth. So the regulatory agencies are just now starting to issue opinions about stuff. Like the Monetary Authority of Singapore just issued one a few days ago about ICOs, basically. So we will, I think, see the regulatory authorities begin to evolve. Also, like, the U.S. authorities are really starting to think about what are the implications of artificial intelligence. And if, one of the central tenets of regulation is transparency and making sure that transparent operations are happening so that the regulatory authority can examine and know what's happening and audit and things like that, right? Well, if you have an AI model, that isn't necessarily, unless you build the transparency in, you may not have that transparency. So I think we will see that, and we're starting to see signs of that, but it's going to take some time for them to adapt, and it's always going to be a moving target, I think, too.
Cool. So, in this open API model, as well as the large data that the banks have, it gives them tremendous advantages to do things, but they also have to deal with security issues around that data. Startups are not as well equipped for that. Is that a fundamental advantage to the large incumbents to have that kind of moat that the startups don't have? Because the data is effectively what can drive decision-making for future products and future things. So how does that work into a startup's favor or not favor? Not favor? Okay, I'll work through that one. You're the big banker, but you're a big banker now too.
I just don't want to hire. Well, you are.
I think at a startup related to security, you have to have very firm rules in place. And start with that and have people take that very, very seriously, just on a everyday level, no matter how big or small you are. So, and then make sure that all your systems are, constantly reviewed. So that's a small company perspective.
Right.
Just from early days, we had very, very strict rules around the protocol.
I think that moat is a defense, absolutely, but it also, you have to be careful not to let it turn into kind of a boat anchor too, or something like that, because that moat inhibits velocity and agility and nimbleness as well. So there's a flip side of it. So I think the banks have to be mindful of how they are going to extend their operations, how they're going to evolve, how they're going to remain nimble, and so forth. But there's no doubt that security and the ownership of data present impediments to startups. I think for sure, which probably does it leads to partnerships and things like that.
Yeah, I mean, in the insurance industry, I see it a lot. The data is really a key differentiator and advantage provider. But the new models and the new machine learning algorithms are being developed by the startup. So how they partner will be interesting.
Completely, yeah.
It's a funny dance that is occurring. The banks, absolute part of the DNA is we are risk averse. In the startup world, if you're risk averse, you will never succeed. So there's bring on the risk. Every week is let's survive, let's grow. What do we have to do? But you put these things together, we live in very exciting times. The stuff that we're all involved with, there's so much change, there's so much possibility. And of course, with all of us trying to figure out how to make it work is where the action is.
Well, the break fast, move quickly and break things. In the internet world of free fintech really driving, getting involved, I didn't have a problem with it. In fintech, we're talking about real money. It's not the same. If the web page doesn't show up, I'm okay with that. But in fintech, if my money doesn't show up, I got a problem with that. So,
Totally.
cool. So I think with that, I want to thank you everybody for being here, and hopefully the next session will be just as awesome as this one was. Thank you.
Thank you.